Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, a mixed bag when it comes to volatility today across most CME asset classes. We're seeing some snapback rallies in volatility. A lot of people are thinking that the downward revision in volatility most of the week was perhaps overdone, and now that we're getting just a couple days closer to the debt ceiling talks, even though they're not for a while, it seems like people are starting to grasp reality, thinking that, hey, maybe it's worth owning some volatility right now. Well, let's first start talking about equity vol. Equity vol in the S&P 500 virtually unchanged on the day, down quite a bit on the week. But again, let's not get too excited. It is as low as it's been since 2007. But once again, it's only measuring 30-day volatility. And most of the action that's built into the marketplace doesn't really begin until the end of February. With that, 3-month at-the-money implied volatility is up slightly today and basically has been up most of the week. Going to call it virtually unchanged to maybe up a half a point on the week as that term structure continues to get steeper. Again, the first 3 months of the curve are just beaten down, whereas 3 months, 6 months, a year out continues to stay high or goes a little bit higher. So term structure definitely very, very steep right now, trading in the 5th percentile. Moving on to the euro, we had some dramatic moves this week. Dollar going lower, continue to go lower, especially against the euro. Most of the week, volatility was down, except for today. You see a 5.5% spike in the euro volatility ETF. Also, the yen volatility and risk currency volatilities have seen some upward action. It needs to be said that yen vol has been up just about every day this week. Moving on to gold, gold's had some tremendous moves this week. It has moved above some key support levels that people were talking about, resistance levels, now are support. Today we're seeing a pretty good upward spike, 1 to 3 month at-the-money implied volatility, although it was lower, and its lowest point was Wednesday of this past week. Lastly, oil vol up just a little bit today, more so in the back months. Oil, though, virtually unchanged and has dripped lower most of the week. Well, that's it for the volatility story. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.